conversations on innovation. And the man who's going to do it for us is Tony Coleman, Chief Technology Officer of Temenos.
Morning everybody. Yes, whilst we wait for the slides to come up, my name is Tony Coleman. I am CTO over at Temenos, and I'm going to take I think over about 20 minutes to talk about innovation in a generic sense, but specifically, of course, for core banking as well. And I am aware that I'm between you and coffee, so bear with me as I bear with the slides. So one of the questions that we ask when we're talking about innovation with our partners, and I'm going to try really hard not to name check the panelists that just go up as we go through, and I promise that the slides weren't put in collusion, but it might seem that way. The first question we ask is, why? What is the business problem you're trying to solve? What is the thing, what is the customer issue you're looking to solve? And then as we go through this ideation process, we then say, well, okay, what if? What if there was something that allowed that hyper-personalization to support those vulnerable customers? What if? And then the next question, and arguably the most important one, so what? If you come up with a great idea, but it stays as an idea, it's not helpful. You need to take it to reality and really drive it through. And that normally means someone has to pay for it as a business case. So I'm going to touch on a few different areas now. We talk about cloud native. And I think it was Oz said about how there's cloud native and there's cloud native. One of the great things about it is the continuous improvements of the hyperscalers. The cloud in 2023 is radically different than it was 5 years ago, let alone 10 years ago. So keeping up to date with those innovations from the hyperscalers and pulling that through to whatever platform you're using is absolutely key. There are lots of great things about the cloud, but there's also some not so great things. That unlimited compute is great. You tried provisioning GPUs at the moment, it's kind of hard. The other piece, we know lift and shift doesn't work. And also really important not to make a typo on that. The other side of it is, of course, skill gaps and skill scarcity. So yes, it's important to embrace this technology, really get into it, but you need to train people. You need to bring people with you on that journey. The way we look at it, and I would encourage for those of you who are going on this journey, it's not about technology. Ironically, and as CTO, it's possibly slightly self-detrimental to say so, the technology is actually the relatively easy part of this equation. The hard part are your people and your culture. You need to really think about how all of this sits together. But cloud native is good, but as I've said, it's a journey. Not good enough, in my opinion, to be cloud native. You need to be able to run across multiple clouds, what I call cloud agnostic. And here I choose the term carefully, because I don't mean cloud neutral. I don't mean stick everything in a VM, heaven forfend, or even just containerize absolutely everything and run it on OpenShift. That's a great thing for some workloads. I'm talking about really using those managed services of each of the hyperscalers. Some of them do better things on some platforms better than others. Don't get me started with your functions. So it's about understanding the limitations and, more importantly, where you can differentiate over those different clouds. So to produce that all-important infrastructure as code that you can run and leverage it in the exact managed services that you want to on each of the platforms. If nothing else, this helps you when it comes around to negotiating with that hyperscaler. Being able to move your workload from one cloud to another instantly or within days gives you a huge amount of leverage on that side. Blueberry muffins. From the sublime to the ridiculous. So, blueberry muffins. Why am I talking about blueberry muffins? Well, part of it is a quote, which I'll get onto, and it's this. Banks want to buy blueberry muffins. And here, the blueberries are security and compliance. And one might argue there's a pile of other NFRs that you need to build into that. So when you're innovating, you need to think about your blueberries. And the quote here is from a chap called Coleman, who's the head of technology at Wells Fargo. For too long, core banking has perhaps created a lovely, fluffy muffin, and then we've made the banks push the blueberries in. And the quote here is, if you're having to push the blueberries into the muffin, it's not a blueberry muffin. So as you're going through this, you need to be thinking how your blueberries end up in the muffin right from the start, rather than making people put them in later. We talked about microservices, we talked about modular architecture. How you choose to use that modularity and that architecture is another key part of how your innovation drives this discussion. I love what Nick was saying about saying you've got all of these modules that talk together because they have to, and if you want to swap them out for something else, you can. That fungibility is a key piece. The way we look at this is, yes, APIs, absolutely important. API enabling absolutely everything, for sure. As I think someone called it hygiene factor, table stakes, whatever the phrase you want to use is, it's a given. But more and more, as we've seen the comments earlier about the real-time aspects of this, is moving to an event-driven architecture. The idea that everything is loosely coupled, so that you don't even have to wire things in, even via a service mesh, that you can add components into your architecture, into your business, to support whatever innovation that you're trying to drive through. So that you can add, remove, take, wherever. But it's not easy. Having a distributed architecture has challenges, and that cost factor is a key piece. Because if you do deploy everything as a swarm of microservices, if you choose to go that way, there are fallouts. The Goldilocks story of your granularity of your services, not too small, not too big. Choosing so you don't spend so much time on the network, shuffling those electrons around, is a key part. There is simple beauty in sticking services closely together. How you deploy those services across a distributed network can have a huge impact on your carbon, on your performance. So there are the good news here is there are some well-established patterns that you and your team should lean into when you're looking at this distributed architecture. Saga pattern for data integrity, inbox patterns for event atomicity, and so on and so forth. But the one I want to talk a little bit more on is efficiency, and how you think about efficiency when you're doing new projects. It's what I refer to as leaner and greener. This is the ESG piece, the carbon footprint piece, that not all languages are the same. Indeed, some languages are much heavier when it comes to it. And part of this is getting your teams right down at an engineer level to understand what the impact of those design choices are. That when you're going to compile this through, if you're running Python, that yes, it's a wonderful language and there's lots of great advantages to it, but it sucks in terms of performance, in terms of efficiency. So is it really the best thing for that? To understand all of these pieces, to understand not only the amount of electricity you're consuming, but where you're consuming it from, the choice of data center, using things like, again, innovations from Microsoft and the Green Software Foundation about their carbon-aware compute APIs, to understand where your electricity is coming from. If you run it at a certain time of day, you're leveraging solar. These sorts of ideas play into this. And to be able to use all of that at scale so that you can handle 3 million, 30 million, 300 million accounts, whatever that number is, and you can track the cost of each transaction all the way through, not just in terms of the sheer dollar cost, but also the carbon. And then there's a number of items that we've talked about, the characteristics of NextGen Core Banking. There's another set of technologies coming along at pace that we need to think about holistically and how they play not only in core banking but the wider ecosystem. And we've talked already about end-to-end. You've heard that phrase a few times. Open banking is not enough. The idea that you're moving from open banking through to open finance, through to the open economy. So some idea of future use cases that we think of about how we approach this at Temenos is things what I call future embedded finance. You heard the term earlier. Not buying your fridge. What happens when you're buying a house? Imagine that checkout journey where it's going to understand your current financial situation, your current mortgage, what your salary is, whether you're going to get a pay rise, when your bonus is, so that that journey understands, and you don't even have to apply for the mortgage, and you add your house insurance at checkout. And a lot of that becomes possible because all of that data that we've been talking about, that I think Steve mentioned, that data is there not only in your systems, but all of the other systems in that hyper-personalized journey. And we talked about the Metaverse, that got mentioned, thank you. I've said no banking in the Metaverse. Please don't build a branch in the Metaverse. Please. Our view is it's about using banking to power those Metaverse experiences, whatever that looks like, seamlessly. So again, it leans into this idea that banking becomes embedded in what you're doing. It's a thing that happens as a byproduct rather than the thing you're doing per se. And then the last one I want to touch on is this idea we refer to it as totally leveraged. It was touched on. This is actually the one I'd quite like to have happen. Imagine that your savings are automatically put in the most effective vehicle at an equal point in time. Not that you have to go onto the money saving expert and see which bank is offering the next current account rate, that it just happened for you on autopilot without you having to worry about it. Or perhaps at the other end, if your credit card is maxed out, that it's understanding the best rate, that it does the balance transfer for you, and you don't have to get a new credit card, and it all just works. I'd quite like that, frankly. But what does that all of that mean? When we went through this, actually there's a few things that all of these sorts of use cases have in common. The core is at the heart of all of this. It's that data that's going to power it, but there's a number of items that we need to worry about. It's a highly regulated industry. So some examples here, but consent, privacy, versus open finance, that wonderful dichotomy. So some areas to think about. And we've done so well, haven't we? We're 11:30 nearly, and no one mentioned ChatGPT. Well done. But I figured, it was touched on, large language models mentioned. It's 2023. Excuse me. Somebody had to mention it. It's a little embarrassing first, but never mind. But what does it mean again to use AI innovatively in a highly regulated industry? It needs to be responsible, the responsible use for AI. We talk about bias, we talk about explainability. There are laws coming to action that will enforce providers and banks to be able to evidence why decisions were made, to think about these things not only at runtime, but at design time. And as we've said already, that data, the key thing about all of this is the data you're using to train your models. And it's not about you. It's about your ecosystem. Maybe Nick's rolling his eyes again now. In our experience, it's hard to innovate in a vacuum. You need to work with your customers, with your partners, perhaps even with your competition. because that's where you really get to leverage that power where the whole is greater than the sum of its parts. And it's not just about that. I was at Finos yesterday, and if you aren't members, you should join. It's a really great initiative to bring open source into more financial services organizations. There is a huge amount of really important stuff going on in the open source community that you can absolutely lean on and of course contribute back so that we can collaborate across organizations. And definitely if you look at, to take the large language model area as an example, already we're seeing the open source community leapfrogging even the likes of Microsoft and Google. In fact, there's a leaked memo from Google on this exact topic doing the rounds on socials. I'm sure you can find that if you're interested. So, in summary, innovation is as much about culture, it's as much about how you do things, why you do things, and of course it helps if you're building on a platform and with a partner that has addressed many of these things. Whoever that may be, look to your partners, do your due diligence, do your evaluations, and understand where you want to differentiate, where you choose to differentiate, and deploy it in a really green manner, please. Thank you very much.
Thank you very much, Tony. Before I let you go, are there any questions for Tony? Anybody? You've beaten them into submission.
Why did you say don't build a bank in the metaverse?
I mean like a virtual branch or a virtual call center, right? Nobody wants to queue up for anything. I've done so well in making all of this light touch. Don't make me stand in a virtual queue. That's what I mean.